How's it going, everybody? Mark Lozano here again, Christ Center Capital, with our weekly three picks, right? We're going to come at you every week with these three picks, and we're going to have a little bit of news information coupled along with it. The post has not gone live yet. I'm recording these videos before the posts go live on the Christ Center Capital website. For those who are not familiar with Christ Center Capital, we are a moral investment underwriter, a moral underwriter of investments. So we are just calling out what cryptocurrencies, stocks, ETFs, mutual funds, alternatives are aligned with those Christian moral convictions and which ones are opposed, right? Um, every week we're coming at you with three new picks that reach our consensus that the market is actually recommending. And this week, I'll go right into it. This week, we had a bulk food company, we had a shoe company, and a streaming company. Unfortunately, not one of these achieved a positive rating. But we still think it's very important to talk about the bad as well as the good because we want to make people aware of the bad. You got to have knowledge to be able to not invest, and you got to have knowledge to not be a passive investor. You have to have knowledge to be that active investor that we're always talking about here at C3. So, everybody knows the gold companies, those are the ones that pass our moral screening test with flying colors. Purple, they're essentially neutral. They pass, but we're still not comfortable recommending them. And we have the red companies that outright fail our moral screening test. This means they're supporting abortion, pornography, transgender legislation, critical race theory, human trafficking, child labor, bad politicians, all the like, right? They've turned up some red flags somewhere in that mix. Now, our first one is that bulk food company, Costco. Costco, it's a kind of a no-brainer why they're reaching the market consensus and being recommended by the market right now. Costco, BJ, Sam's Club, they're all getting more and more traffic, more and more customers because inflation's high, your dollar's not going as far. It's tough to shop at the everyday grocery stores, like Publix and Winn-Dixie if you're down south, Giant, Weiss, Wegmans if you're up here in the north. It's tough to shop at those places because your dollar's just not going as far. So a lot more people are turning to those bulk food distributors, those big box stores, right? And the reason Costco, so that was the reason it made it in. The reason it gets a red rating is because a lot of its donation dollars, a lot of its extracurricular activities, as we like to call it, are going to very liberal, very secular sources. They're going to support things like abortion and the National Urban League and things that are promoting things that Christ Center Capital just does not agree with. We don't believe any of the true Christian moral teachings would agree with. Costco still, even though they were donating somewhat small, relatively small amounts for how big they are. And we were tempted to make them a purple company because Costco does do a lot of good. It provides food that rarely poisons or harms anybody at affordable prices, and they're able to feed a lot of families and they're just able to feed a lot of people, which is a good thing. So Costco, we understand that there's a really good argument to be made that they should probably be at least a purple company, but our little algorithm, our little screening process turned them up a red company, and we try to stick true to our guns here. Netflix. All right, if you've been following the newsletter, which I hope you have, the newsletter is way better than the YouTube videos. The newsletter is probably even better than the website. The newsletter comes out every Wednesday. It's completely free, like everything on Christ Center Capital. Everything's completely free. But the newsletter has been telling the love hate story that C3 has with Netflix. Netflix, by no stretch of the imagination, is a company that we would ever recommend to invest into the Christian investor, unless they're a billionaire and they're doing the Elon Musk thing to Twitter. Because Netflix, pornography. They have some child grooming content that people have claimed. They have supported abortion legislation, LGBT legislation. They've been opposed to like some of the heartbeat bills, just to name a couple things that Netflix turned up in our kind of our moral rating process. The reason we have a love-hate relationship, again, you know this, and I'm probably repeating myself if you're a follower of the newsletter, but Netflix and Disney Plus are the two main competitors in the streaming wars. They are, A and B, the two top dogs, And Netflix has at least offered up some opposition to the wokeism, to that secular left wokeism, right? They've offered up some opposition. They've supported comedians like Bill Burr and Ricky Gervais and Dave Chappelle. They've toned down some of the woke content that they've been trying to produce, and they didn't cave when their LGBTQ plus employees walked out. They've offered up some resistance. Their main competitor, Disney Plus, from our knowledge and from our research, has offered up no resistance. They are full gung ho on the wokeism, the LGBT agenda, all that kind of stuff. So even though we don't recommend either of those, they're both red companies for us. We're rooting for Netflix in a kind of a weird way to win that streaming war. The reason Netflix was recommended and made it into the consensus report from a financial perspective is because even though they lost subscribers and they're kind of stagnating on growing their company and everything, a lot of investors like the ideas that they're starting to try to implement to gain more market share, right? So they're cracking down the password, the password sharing. They're trying a couple different things, new things in different countries and different areas before they bring it to the States. They're trying to be innovative in, offering tiered subscriptions where ads would be shown. So they're trying a couple different things that investors think will actually work out in the long haul. So that's why they're being recommended. And after their earnings dropped this quarter, they did rise about 30%. So that's a pretty good rise for Netflix, which a lot of people thought was kind of in a real big struggle. Sorry, I'm not using my words the best here, but Netflix was struggling. They're up 30%. That's why they're up 30% because investors are pretty confident in the way that they're trying to maneuver their company, how Netflix is trying to maneuver the company. The last one here still got a red rating, is Skechers. So Skechers is definitely a better alternative to Nike, but they're still using a lot of the labor that Nike uses in the manufacturers in Vietnam and China. They are making relatively low third-party donations to Planned Parenthood. That means they're not giving directly to Planned Parenthood. They're giving to things like United Way charities. That the way United Way works, for those that don't know, you could have a United Way in Texas that's donating to a pregnancy crisis center, and you could have a United Way in New York that's donating to a Planned Parenthood. So they're all very independently organized. So when you donate to United Way, there's no catch-all set of rules of where that money is going to be going. And Skechers has donated to United Ways that have directly supported Planned Parenthood. So none of the companies there got a red rating, and that's disappointing. But the thing is, we can't, as the moral underwriting company that we're trying to be, we can't just force feed good gold stock picks or cryptocurrencies or any kind of asset, right? Because if we're just searching for the good assets, we could be recommending things that are just not financially sound. So we're trying to get the financially sound part is the number one criteria, and then we're trying to give the investor that information of whether that financially sound asset is actually a moral asset. So we don't look for the moral assets and then say whether they're financially sound, because honestly that's like trying to find a needle in a haystack. It's much easier to find the financially sound asset and then discover whether or not it's moral. And the reason that we can't do the needle in a haystack approach is because we offer all of our content for free, and we're basically volunteers that do this research. We're always trying to work on more innovative ways to get that funding and to do all that kind of good stuff, and get more dedicated time, because we had some people recently. My team told me that people were asking, why don't you include more stuff about child labor, human trafficking, tax evasion, overseas politics, and stuff like that with some of the publicly traded companies you evaluate. The short answer is we don't have the bandwidth, we don't have the time, we don't have the money to do so. So we go after, I like how the person phrased this, we go after the low-hanging immoral fruit. So the easy things to uncover is, are they supporting abortion? Are they supporting LGBT legislation? Are they backing critical race theory or common core education? Are they, these kind of things are really, really easy to uncover. They don't take a whole lot of manpower or bandwidth. And our thought process is, if we get a red company, or if we get a company that makes it into our curation report, it's a good financial asset. When we start doing the moral, we go after that low hanging fruit, because we're like, if they're supporting Planned Parenthood, we don't need to go any further. We know that's already an asset that we should not be supporting as Christian investors, and then we can move on to the next, because time is money and time is very limited on the C3 side of things. So now, if a company doesn't turn up any red flags when we look for that low hanging immoral fruit, then we're going to start looking at the tax evasion and the lawsuits overseas and the human trafficking and the child labor and the way they procure their goods and services. We're going to start looking at those things. So our gold companies are actually much better researched than our red companies, if that makes sense to everybody. Hope I explained that well, so you guys get a little bit of insight to the process here at C3. The last thing I want to say is, I would love, personally, and I know my team would love, to go down the rabbit holes of research, just so many different things, whether it be individual assets or foreign exchange or different markets, international markets, international exchanges. We would love to do as much research as possible and just flood the Christ Center Capital website with as much content as possible. But unfortunately, we don't, like I said, we don't have the manpower, we don't have the bandwidth, and we definitely don't have the capital. But if you feel like supporting us, you could always go check out the homepage. One of the best ways is to go sign up for that newsletter. You hit support C3. That's always a great way to go. You can give as little as $1 a month. We'd appreciate it, or just give a one-time donation of $1, whatever it is, or more. We'd always appreciate it, because all that money goes to promoting and producing this content. And then, of course, we have our little merch shop here. You can get like hats and hoodies and all that stuff. That helps too. That's a great help, because all those proceeds go back to help C3 produce and promote that content. But that's all I got for you guys today. Hope you enjoyed it. And like I said, if you're only watching the YouTube videos, you are not getting the full experience. Go sign up for that newsletter. The newsletters are so much better. Please go sign up for those. But all right, God bless. Thank you guys for listening, and please hit that like and subscribe button.